The world's second-largest economy is losing steam, Wall Street is riding a roller coaster, and the Fed's playing it cool. Welcome to Finance and Economy Daily. Let's unpack today's biggest stories. China's latest data sent a chill through global markets. Industrial output and retail sales in July both slowed more than expected, marking the weakest growth in several months. Industrial production rose 5.7% year-on-year in July, compared to a 6.8% rise in June, while retail sales increased by only 3.7% compared to a 4.8% rise in the previous month. This slowdown highlights the challenges facing Beijing as it tries to revive domestic demand while coping with weak global trade and ongoing property sector troubles. For investors, the numbers raise questions about whether China, the world's second-largest economy, can sustain its role as a global growth driver. A weaker China means softer demand for commodities such as oil, metals, and agricultural exports, which could hit emerging market suppliers hard. Analysts expect Beijing may roll out fresh stimulus, but markets remain cautious, with Asian equities already showing declines following the release. On Wall Street, the Dow Jones Industrial Average briefly hit a record high, lifted by a sharp rally in United Health, which surged nearly 12% after Berkshire Hathaway expanded its stake. However, the upbeat momentum in the Dow contrasted with pressure on the broader market, as the S&P 500 and Nasdaq slipped. The divergence underscores growing uncertainty about Federal Reserve policy and economic resilience. While investors cheered company-specific gains, the broader market was weighed down by stronger-than-expected U.S. producer price data, which rekindled inflation worries. Adding to the debate, Chicago Federal Reserve President Austin Goolsbee said today he needs more assurance that inflation is truly easing before supporting an interest rate cut in September. His remarks suggest the Fed may remain cautious, especially with services inflation still proving sticky. Markets had been pricing in at least one rate cut this autumn, but Goolsbee's comments, combined with hotter producer price data, have introduced fresh uncertainty. If the Fed delays easing, borrowing costs for businesses and households could remain high for longer, slowing investment and consumer spending. Investors will now watch upcoming inflation and jobs data closely, as these numbers could make or break the case for a September rate cut. Other headlines you shouldn't miss. Present and former OpenAI employees are looking to sell nearly $6 billion worth of the company's shares to an investor group comprising SoftBank Group, among others. The University of Michigan surveys of consumers on Friday said its consumer sentiment index dropped to 58.6 this month from a final reading of 61.7 in July. That's all for today's Global Economic Roundup. For your daily dose of global economic and finance news, please subscribe, like, share, and comment. See you tomorrow.